Technical analysis looks like a shortcut. Draw some lines, spot the trend, and boom, make the trade. But what happens when the real world just doesn't follow the chart? Well, in this video, we'll break down the flaw that sometimes even seasoned traders overlook and why charts alone cannot protect you from the chaos of today's market. So first off, if you aren't too familiar with technical analysis, do you ever wonder why so many traders seem to obsess over stock charts and patterns? That's technical analysis in a nutshell. It's using past price movements and trading volumes to guess what might happen next. And I think it's popular because it feels visual and it's immediate.
But let's be fair, some traders do consistently use charts for short-term plays. The real question is whether the average person can replicate that success without deeper context.
Absolutely true, Tiara. But if you're new to investing, it's tempting to believe that you can spot a winning trend just by reading a chart. And there's a sense of control there, like you've found a shortcut to smarter trades. But as you'll see throughout this video, the real market, it just doesn't always play by the rules of a chart. Now, if you need some proof, just look no further than my own stock market portfolio.
Showing off.
And you may be wondering, well, why would I look there, right? Well, frankly, I don't use any type of in-depth technical analysis to decide what's best to invest in. And I've done pretty well as an investor. So let's take some time to look at what actually drives stocks up and down, because it's not just about the lines on a screen. So ever notice how stocks can swing wildly for reasons that have absolutely nothing to do with the company's profits or business plan? It's one of the things that drives me insane about stocks, right? You can have a 10 out of 10 company and have a CFO resign, and suddenly the stock drops because everyone thinks that, maybe they're cooking the books. Well, let's dig into what's really driving those moves, right? And why it's not just about the charts or the fundamentals all the time. So simply put, social media has become a financial megaphone. Platforms like Reddit, X, TikTok, they can turn a random rumor or a viral post into a full-blown market event. So just think back of GameStop or AMC in 2021. Those weren't driven by earnings reports or company news. It was regular people on Reddit's Wall Street bets that were banding together, creating a buying frenzy that sent prices into the freaking stratosphere and left Wall Street pros completely scrambling.
Fun fact, GameStop's stock jumped over 1,700% in a matter of weeks. That's not investing, that's chaos.
100% agree, and it was a crazy time for sure. And this doesn't just apply to stocks either. So remember when Elon Musk tweeted about Dogecoin? His single tweet sent the price of Dogecoin up thousands of percents, all because of hype and attention on social media, not because of anything fundamental that changed about the coin itself. And I have to say, if seeing how tweets can swing, trillions of dollars surprises you, subscribe now so that I can hopefully be the one who tells you about the tweets the next time that they happen before the market makes a huge move. Now, interestingly enough, a study from the National Bureau of Economic Research found that the volatility of stock prices more than doubles on days when there's big identified news, even if the news isn't about the company's actual performance. The type of news and the emotion behind the news can move prices just as much as the facts themselves. So if you're trying to figure out why your favorite stock just jumped or crashed, you can't just stare at a chart, right? You have to watch what's trending on X, what people are buzzing about on Reddit, and what's making headlines in the news. And in today's market, a viral rumor or a trending hashtag can move stocks faster than any technical pattern ever could. But if the market is this sensitive to rumors, news, and social media trends, what does that mean for technical analysis? Well, let's break down exactly where the charts fall short when the real world kind of takes over. So let's set the stage. So imagine you're watching a stock that's been, following a textbook technical pattern. Maybe it's bouncing perfectly between, support and resistance, which are terms technical analyst traders use often. And all the indicators say it's about to break out. You line up your trade, you're feeling confident because the chart says that you should, right? Then right as you're about to pull the trigger and press that buy button, a rumor drops on X that the White House is about to lift tariffs on every country except China. And suddenly the market just goes wild, right? Stocks surge in a matter of minutes as the rumor spreads, not just on X, but across major news outlets like CNBC and Reuters. And before you can even react, the White House steps in and calls the story fake news. And just like that, the market tanks, wiping out all those gains and then some. That stock that you were about to buy, it went up 7% and then down 9% within a matter of hours due to a rumor in the media. And this isn't some rare freak event. This actually happened in April 2025, and it's part of a much bigger pattern. A single unverified social media post can move trillions of dollars in market value in minutes. The problem is technical analysis that can't see the future. It's built on the idea that past price patterns will repeat, but is totally blind to the unpredictable stuff, right? The rumors, the viral posts, breaking news, or even a single influencer's tweet that can flip the market upside down in seconds. You can have the perfect setup according to a graph, but if the crowd suddenly stampedes in a different direction because of some random trending thing, your chart won't save you. So if you've ever felt like your technical analysis was right until the market did something crazy, out of nowhere, you're not imagining things, right? The real world just doesn't follow the script of a chart. And if you're not watching the news and social media and the mood of the crowd out there, right, you're just missing out on the biggest drivers of short-term price moves. But if technical analysis can get blindsided so easily, what should investors actually be paying attention to, right? A very valid question. So let's be honest. Most of us, we grew up hearing that the smart way to invest is by looking at the fundamentals, right? You dig into the company's earnings, the balance sheet, and the business model. That's supposed to be the playbook for long-term success. But here's the problem with that. In today's market, those fundamentals often take a back seat to something that's way more unpredictable, which is investor sentiment. So think about what we just saw with the tariff rumor that happened, right? The companies themselves, they didn't suddenly become more or less valuable in the span of, a couple hours. There was no blockbuster earnings report, no major product launches, nothing on the books that should have moved stocks by, 8, 9% in a, half an hour. It was pure emotion and crowd reaction, set off by, a viral social media post and amplified by news outlets scrambling to keep up. Trillions of dollars changed hands, not because of what companies were actually doing, but because of what people believed might happen next. And this isn't a one-off. Social media has turned the market into a giant feedback loop. A rumor or a meme can get picked up by a few big accounts, go viral, and suddenly, everyone's piling in or running for the exits. And the truth is, in the short term, markets are driven by stories, not spreadsheets. It's about what's trending, what people are talking about, and how quickly that excitement or fear can actually spread. Fundamentals still matter for the long haul, though. But if you're trying to predict what a stock will do tomorrow or next week, you really can't ignore the power of hype, rumors, and crowd psychology. So if you're sitting there wondering why your carefully researched stock keeps getting hammered by wild swings, you're not alone. The market's mood can change in a heartbeat, and the fundamentals just don't always get a say, at least, not right away. So knowing all this, how are you supposed to invest successfully, right? The answer probably isn't as complicated as you may think. So the reality is you don't have to pick just one option, right? The smartest investors today are finding ways to blend technical analysis with real-time news, social media buzz, and even the latest memes, because in this market, both sides of the coin actually matter. So what if, as a scenario, right before you hit buy, you see that the stock is, trending on X or Reddit? Maybe there's a viral post, a new rumor, or just a ton of chatter about an upcoming announcement. Now, this is where news and social sentiment come into play. So research backs this up as well. So a major study analyzing 11 years of the S&P 500 found that strategies combining news sentiment with technical indicators outperformed those using either approach alone, especially when it came to catching trend reversals that charts alone often miss. And another 2024 study using deep learning to predict the S&P 500 found that blending news sentiment with technical signals significantly improved accuracy over models that just relied on one source. So now let's walk through a quick example here. So suppose you're eyeing shares of a tech company. We'll call it Tech Corp, right? The fundamentals look great. So strong earnings, solid growth, and a product that's getting rave reviews. You check a technical chart and see that the stock is approaching a support level, and the RSI, which is the relative strength index, tells you that it's not overbought. That's a green light from both the fundamental and technical side. But then you notice that TechCorp is trending on X with rumors swirling about a possible acquisition. So the volume spikes and the price starts to move even before the news is confirmed. And if you were looking at, the chart, you might have missed the reason for the move, or worse, you could have gotten blindsided by a sudden reversal. So by paying attention to both the technical setup and the news, you can make a more informed decision, time your entry better, and manage your risk if things get wild. And here's the reality here. You don't have to be glued to your screen 24/7 to pull this off. There are tons of tools out there. So news aggregators, social sentiment trackers, and even trading platforms that integrate real-time social feeds so you can spot trends as they happen and react before the crowd does.
Quick tip. Platforms like Koifin, Market Chameleon, or even Google Trends can help you track news and sentiment without drowning in info.
Yes, thank you, Tiara. And really, any of those platforms can help. But the most successful traders today are using, a combo approach. So fundamentals to pick the right stocks and technicals to find the best entry and exit points, and news/social trends to catch those moments when the market's mood can just flip in an instant, right? So next time that you're thinking about a trade, don't just stare at the chart or, chase the latest headline. Use both. Check the fundamentals, scan the technicals, and then ask, what's everyone talking about right now? That's the most important thing. If you can blend all three, you'll be way ahead of the crowd and a lot less likely to get caught off guard when the next big move hits. Now, me personally, I lean much heavier into fundamentals and trends than I do on technical analysis, and it's done quite well. But I don't think that my approach will do well for everyone, and your best bet is to do whatever works best for you. And while I'd love to tell you what that is, right, I think that that's important for you to discover yourself. And if you're starting to see how powerful market sentiment can be, you might be wondering, well, do small, consistent investments even stand a chance then? Well, in this video right up here, you'll see just how far tiny daily contributions can actually go, and the math behind this will definitely surprise you.